Hi, and welcome to another weekly recap. So, today I'm going to recap from July 28 to August 1. And again, I didn't add EU, so it's still GU and XAU for now. So, this week I got one winner, and it's in the XAU on July 31st, and it was a very good winner actually. And I got an 2.5 hour, good 2.5 hour, and I also ended up a break even trade and one losing trade, which is in the GU pair, and that is during the London session. So yeah, I'll just discuss what was the psychology behind taking these trades and what were the new learnings that I learned from the past 100 days of training, from 200 to 300. So you'll be getting a detailed brief video about past 100 days of 100 trading days. Still I am in that cycle. I'm not able to clear the prop firms. I'm getting consistent losing trades, five losers and one winner. I just saw the my strike rate, it was just 33%, but the irony is that I'm able to correctly analyze the market. I'm able to correctly predict the direction of which the price is going to do, but the thing here is I'm not able to capitalize on those moves. So I'll be working on that. uh, for the initial stage, I just added one more layer to my analysis, that is the time and price theory. I just added it. So it was I used that during my October 2024, but I uh, removed that layer because it was over complicating. But now I again added it because there were to improve my strike rate at least, and to eliminate the those losses which the time and price theory could remove. So yeah, just to improve the strike rate, no, you can see reduce in the trade frequency, but trade frequency doesn't matter if most of the trades ended up as a losing trade for like me. So yeah, that is the first thing that I'm going to implement for the next 300 to 400 trading days. And one more thing that I'm planning to implement is integrate AI, probably chat gpt to include ChatGPT as my second brain, so that both can discuss and brainstorm and get to a conclusion of whether the particular setup is valid, or whether what is the probability of success and those kind of things. So it's still a work under progress. So the step one is analyze the last 100 trading days and find patterns of where I'm losing. So that is the first step. And the second step is, you know if I'm able to analyze the patterns and bring in some solution for that, so I'll be applying that for the next 300 to 400 trading days. And third step is training an AI model with my set of rules, with my set of understanding of the market, what are the conditions for the supply or demand. So all those stuffs I'll be training a model. And then both, and if a setup occurs in the market, then I can give all the possible positive scenarios and negative scenarios, and what are the risk factors. And based on that, we can AI and me can um, discuss and come to a point to whether to take the trade or not. So this is applicable for swing trading. I'm not sure whether this is applicable for scalping, because you need to be super fast in executing the trade when it comes to scalping. And one more thing is, being a professional, I'm not sure whether I'll be able to get time to discuss a trade with an AI bot. But let's see. I'll make the steps very simple, so that whenever there is a setup, it's just 5 to 10 minutes discussion with an AI bot before a 15-minute candle closes, and then I can execute the trade. So yeah, that's a short note of what is gonna come from for the next 100 days. But yeah, it's still work under progress. Probably you will not. I'll not be implementing that also in the next, first, at least for the first 30 to 50 trades. So yeah, okay, let's now focus on this week, and let's focus especially on GU. So let's jump into the whiteboard and see what happened on GU and why I didn't get any trades, and why it ended up as a break even trade. So we'll analyze that in detail. So here we go, GBP USD and XAU USD. So starting off with GU from the daily chart. So as usual, I'll be extensively analyzing the daily chart for the first day and Wednesday and Friday. Apart from that, because the daily mostly remains in the same area of value, so there is nothing to discuss in the daily chart. So that's the reason. Cool. Yeah, from the daily perspective, you can see that the swing structure is bullish, and price has just swept the sell side liquidity, just swept the sell side liquidity, and now it's starting to push up. But the thing here is, there is no structural confirmation that the internal structure is bullish. Still, the supply is holding the price, and know there is a V-shaped reaction. This could indicate that the swing low is now weak, and it can be taken out. Moreover, this swing low is a kind of low resistance liquidity, so probably price can push down and easily take out this sell side liquidity, and there is a unmitigated demand below, which I can expect the price to mitigate. So all these information provide me, suggest me that looking for sales is valid, and the target would be the daily demand zone. So coming to the 4-hour chart, you can see the same V-shaped reaction right here, and this is the 4-hour supply that is currently holding the price. And I can't expect the price to push all the way up to mitigate this supply and then push down. So that is very rare. So what I can expect is at least to take out some of the buy side liquidities right here. I that mitigate this gap, and if the price chalks bearish in the H1 chart, then I can look for shorts from the supply, and target all the low resistance liquidity right here. So yeah, and again, two things can happen with this demand zone. Either this demand zone can be respected and the price can push up into the supply, or this demand zone can be flipped, and then I can trade from this flip zone. So anything is valid. So this is H1. So H1, the swing structure is bearish, and the internal is going to be bearish because you can see that there is low resistance liquidity, Asian low, everything is there. So all I need is price is already chalked bearish, so this is the supply that is holding the price, so I can look for sales from here targeting the low resistance liquidity right below here. But the caveat is price is still in the 4-hour demand zone, so it's very risky because the 4-hour probably price could just take out the sell side liquidity and then it can push up. And so and also this is a flip zone, so price would be making a complex pullback maybe all the way up to this flip zone, and then boom, it can take all the low resistance liquidity right here. So that's a different story, but for now, there is a possibility of looking for sells, but it's kind of risky. That's it. And here you go. Yeah, price I was bearish, and yeah, as I already told you, like a price can sweep this liquidity and push up, and this is a very good price candlestick for that. It swept liquidity and pushed up, and it chalk bullish. So this POI was formed during Asia, and this POI was formed during the New York session. So which POI would you think that would hold? Obviously, price mitigating the 4-hour demand zone, and sweeping sell side liquidity and then pushing up with momentum during the New York session. So it's kind of you know very easy to analyze that okay, this POI is going to hold and price can push up. And also this demand, I mean this supply was formed during the Asian session, and there is a possibility of the price pushing up to take out the Asian highs also. So with all this in mind, I was not interested in looking for sells from this POI, so I was just waiting for this supply to be flipped so that I can look for sells, I mean look for buys from this flip zone. But in the end, what happened, price respected this supply, and it pushed down rapidly. And also, here you can see that the price has flipped the demand zone. So this is a fake reaction and price flipped it, so this becomes a valid flip zone for our future reference. So yeah, and if you see, if you want to take, if I suppose if I looked for any entries from this POI, it would have definitely be a losing trade, because there was a valid LC1 for taking. But this would be my mitigation candle, I'm sorry, this would be my entry candle, and I would have been tagged in and tagged out. Suppose, or assume that okay, this is a bullish candle, so probably price would have just pushed up and pushed down. So this would have been my mitigation candle. So if I had placed my entry right here, then I would have been tagged in. So this is a bullish candle, so this is the opening price. So price would tag me in, tag out, and then push down. So it would have been ended up as a losing trade anyway. So thank God I didn't take this one. And though my analysis did not play out, but it it saved me from a losing trade. So, and there is one analysis that I made was, sometimes price just respects the H1 POI, and price mitigates the POI that I expect the price to mitigate, and it pushes down rapidly. But most of the time when the price mitigates, it makes some fake um, breaks, which during which I get liquidated, my stops get liquidated. So I'm thinking of collecting the data for H1 risk countries, and analyze on which scenarios that I must use H1 risk entries, and on which scenarios that I must use M15 entry models. So this data is very very useful, especially when you have multiple entry models, and H1 risk entry is much aggressive, and you must use it whenever you feel that the price is going to rally down, or you know price is never going to pull back, or never going to make LC2As. So in those cases, these risk entries are very valid, because even because I already said in the start of the video, many a times market goes in my favor, market respects the supply or demand that I mark in the chart, but I'm not able to capitalize it. But whenever there is a fake break, I get involved, and I be liquidated. So what I'm thinking is like, if the price is consistently respecting my area of values, I'll be finding a pattern, or a kind of see the left side how the price has developed while mitigating into the point of interest. If then with that data, then I'll be able to understand, like, if the price develops like this, or if the price for example, if the price has low resistance liquidity while mitigating into the supply or mitigating into the demand, then there is a lot of chance that the price can push very hard, that it won't make an LC1 or LC2A. So in those cases, that risk entry is valid, right? So in this case, price pushed very hard, but this is not at all an entry for me, because price swept liquidity and pushed up. So this is not a low resistance liquidity for me. So this is not at all a valid supply for me. So though I just made a note, but this note is not for this trade. So yeah, this is end of day one in GU. and price pushed very hard down, and probably it would have mitigated the, no, it did not mitigate the daily demand zone. So price is yet to mitigate the daily demand, but it has clearly was bearish. So now the swing structure is bearish. So from the 4-hour perspective, you can see that this is the supply that is holding the price. So if the price mitigates the daily demand zone and if we get a chalk bullish, then I can look for buys and play that complex pullback till the price mitigates the 4-hour supply. So once the price mitigates the 4-hour supply, then if at all there is a strong low resistance liquidity being built up, then I can look for sells from the H1 perspective. From the H1 chart, if possible, I can look for an risk entry. So here we go. Yeah, this demand is currently holding the price and price has not mitigated the daily demand zone. So I can look for sales targeting the daily demand, one more push down. And once the price pushes and mitigates this daily demand, then looking for sales is not valid. Then I'll be looking for buys. So yeah, here you go. So there is no lid here. Oh yeah, there is a lid, but price mitigated this during the pre-London session, so I was not interested in this trade. Rather, I was waiting for a fake break, LC2A. So if I had taken an LC1, let's see, yeah, this would have been my LC1, but this is not a valid LC1 because price liquidated right here and taking an LC1 right here is it's not at all a valid one. So rather I better look for an LC2A. So here we go. Price made a fake break and then I decided to wait for the price to take out this high, and then with confidence that I can look for sells. Otherwise, if the price makes an M15 I boss, then I can look for M15 confirmation entries and continue the bearish push down. But all these are valid if the price did not mitigate the daily demand zone. So price actually pushed down and it came to the 61.8 level. Okay, 61.8 level. Then did I take a trade? No, I did not take a trade. Why? Because the price was coming off from the daily demand zone. So I was skeptical in taking this trade because this kind of seems like a low resistance liquidity for me. So price can just flip this supply and then continue to make a complex pullback, as I discussed in the start of this day's analysis. So I did not look for an MC entry. So I just waited for LC2A to play out, and it played out. And yeah, these are the risk factors. Price coming out from the daily demand zone. It is London lull, and you know I can look for more confirmation entry if the price makes an chalk bearish. Nevertheless, like price chalk bullish, and immediately I changed my bias because price this is a strong rejection candle and price chalk bullish, and this was I think 8 a.m. and this could be the low of the day. So if this is a low of the day, then this demand would be respected and price can push up, making a complex pullback. But there was some intuition that was telling me that this trade would not be valid because of this bullish momentum. No, probably this bullish momentum was the one that stopped me from looking for longs. But yeah, other risk factors were the chalk bullish was a weak one. It just took out the highs, so this could means that this low could be weak and price could taken out. So there is a contradictory between the time and price theory and the market structure. So I just waited for additional confirmation in the M15 and to get involved. here you go. This was the LC1. So actually I looked for LC1 from this was my liquidity candle, but since the LC1 failed, price took the liquidity, pushed up it. That push is not enough, so again the supply took control, which means the supply is in control all this time. So price started to push down, so the demand didn't take control, so it is not advisable to look for longs. And in the end, price pushed down and made another leg down. So yeah, the intuition played up, and price actually, sometimes your intuition good gives you good uh, signals, but most often not it may give also bad signal, as you saw in the day one. Price actually respected that supply and went down. So never trust your intuition, just trust your analysis. Yeah, intuition is necessary, but just have 10% of it. So coming to July 30, quickly have check at, okay, 9 minutes to go, cool. Coming to July 30, here you go. Price mitigated the daily demand, strong rejection, but because of this strong bearish momentum, price can just liquidate, I mean, mitigate this imbalance, and then it can push down again. You need some kind of energy to invalidate and fair value gap. So let's see if the price is gonna make a complex pullback. So if the price is gonna make a complex pullback, then we might get strong pullbacks. So we need strong pullbacks to mitigate our supply zone, our demand zones, so that we can look for longs. But at the same time, during those complex pullbacks, there might be a lot of manipulation. So let's see. It's gonna be an interesting price action overall. Here you go. Price mitigated the 4 hour, the daily demand zone and the 4 hour as stock bullish, and this is the current, the 4 hour demand that is holding the price. So if the price chalks bullish in this 4 hour demand, then I can look for longs, playing the complex pullback and mitigating the 4 hour supply above. So here you go. In the H1 chart, you can see that the swing structure is bearish and the internal has shifted bullish. So which means that I can look for longs if the price mitigates this supply, and probably I'll be looking for an LC2A, or chalk bullish is much more ideal. And the thing here is, price is still in the discount prices, and there is equal ice plus Asian ice, and there is a lot of chance that the price can push up into the premium prices. So looking for an M15 LC2A is valid, because we have lot of positive confluences aligning with the trade. Here you go. This is M15 chart waiting for an LC2A to play out. And yeah, but I took the trade using LC1 itself. Yeah, I took the trade LC using LC1 itself. So this is the LC2A. Yeah, fake break, liquidation. So this would be my LC2A candle, but yeah, I this is LC1, my liquidation entry, and price pushed up. And yeah, this is a valid LC1, because this supply, this demand was formed within the session. So this was not formed yesterday, so it was formed within the session. So that's why I was able to look for LC once. It was as per my trading plan. So yeah, price pushed up rapidly and mitigated this evening star candle and pushed down. So for some moment that I thought that okay, it's going to be a winning trade, but later price pushed down with force and took out the stops. I was break even when the price reached here, so it did not affect me a lot. Yeah, this could be. I thought this could be the low of the day, because it was formed during the London session. So yeah, yeah, this could be. I thought this could be the low of the day, because it was formed during the London session. But price invalidated this and pushed down. So in the end, the low of the day was actually formed during um, London lull at 11 a.m. So sometimes time and price theory does not work. So it is what it is. When you find a key, the market will change the lock. Moving on to July 31, the daily is clearly bearish and it has flipped this demand also. So the next target should be the sell side liquidity right here. So this is the demand, the 4-hour demand, and this is the 4-hour chart. After swing, the boss, swing boss, we can expect a swing pullback. And yeah, this is the buy sell liquidity that I can currently look to target. Once the price takes out this buy sell liquidity and mitigates into the daily supply, then I can look for sells because we have some kind of low resistance liquidity right here. So yeah, here you go, low resistance liquidity. So again, and I told you in the beginning of the week that H1 risk entry might work. So this is one more case where we can look for H1 risk entries. So price formed the high of the day, and price mitigated the supply. So I thought that this could be the high of the day, and yeah, this was the high of the day. And yeah, price actually chalk bearish right here, and it never pulled back. So it just continuously pushed down and you know never pull back. So if I had placed my risk entry right here, so it would have been a valid trade, and it probably this could be a 2 hour trade because the stop loss is big, right? So even if I keep my entry right here, I would have not been tagged. So it's a bit of task for me to collect data and where to place the entry. Should I place it on the edge, or should I place it at 30% or 50% or 61.8%? So all these data I must collect, then I must trade mechanically. So yeah, I once the price stock bearish, so I expected the price to mitigate the supply, so to look for LC entries, but price never pulled back and it started to push down rapidly. So yeah, this is the M15 chart. Once the price made a clear high boss, looked for an MC entry, but price now pulled back and it just pushed down. So yeah, and that's July 31. So now we are into a fresh month, August 1. So again, the drawn liquidity is still present, so still we are looking for sells, and this supply is currently holding the price, and it also got some buy side liquidity. But also to be aware of, there is an unmitigated daily supply above, so price can make a strong pullback and then it can also push down. So that's why we have H1 to confirm our entries. So here you can see some low resistance liquidity right here, and micro level also you can see some low resistance liquidity. So all I want is price to mitigate the supply and chalk bearish, and that's it. That's all I want. Then I can easily look for sells targeting all these low resistance liquidity. But at the same time, I can also look to pay longs targeting the buy sell liquidity above. So this is also a low resistance liquidity for me. So and this is the buy sell liquidity in the 4-hour chart, and also you can see the price as swept sell sell liquidity, and if the price chalk bullish, then I can look for longs from any of these from this demand zone, and then I can look to target the 4-hour supply above. So this is a quick in and out trade, but it is still valid. So once the price reaches the 4-hour supply, then my bias will change, and then I'll be looking for H1 to chalk bearish, then I'll be looking for sells. So that's the idea. But price never took out the sell sell liquidity, the buy sell liquidity, nor mitigated into the 4-hour supply. It just continued pushing down. So you will be having a twist at the end. So this is what the twist is, And as so yeah, so this is the twist at the end, that the price took the sell side liquidity. This was the sell side liquidity that I talked about. Price took the sell side liquidity, and it also took all the buy side liquidity right here with a fundamental news and pushed up rapidly. And at the same time, it mitigated the daily supply zone. So two in one, everything is done. So now what I can expect is, either I can expect the bullish structure to continue, or I can expect that this low to be taken on because it is a low resistance liquidity low. Also, it is formed via news. So this is very low and has high probability of being taken out. I mean, of being invalidated. So whatever happens, like, just play with the price action and apply the time and price theory to filter some of the losing trades, not all, but some of the losing trades. So yeah, this is okay, this is H. This is revamped drawings, so a cleaned up drawing. So price mitigated the daily demand zone, daily supply, and the H1 is boss bullish. So yeah, let's see on the next week. Until then, cheers. So now let's move on to XAU, and let's analyze what happened on XAU on this day. So as I already mentioned, in XAU I got one winning trade, and yeah, that's it. And let me just quickly show you what I got. Yeah, one losing trade and one winning trade. So a kind of plus 1 hour kind of thing, that's what. Here you go. July 28 in the daily chart. um, this kind of looks like a low resistance liquidity for me, but since it's a daily chart, taking out a low resistance liquidity in the daily chart requires much more, financial I mean finance, than taking out a low resistance in M15 or M1. So for now, I'm not interested in looking for sales. So I am interested in looking for sales if I get suitable confirmations. But for now, what I know is this demand is holding the price, and this demand has formed via sweep of liquidity. So anytime this demand can hold, and also there is some buy side liquidity above, which I can expect the price to take out. if I get if the demand is being invalidated, then I know that all these demand chains will be invalidated and the price will rally down to mitigate into the extreme demand, I mean partially unmitigated demand, because there is also an equal low right here. Cool. So coming to the 4-hour chart, um, you know I know there are a lot of supply and demands here in the 4-hour, but let's focus on what is very important here. So these are the this supply is got flipped, so this is a valid flip zone. So price would be, we can say that the price will be attracted towards this supply, and also it has got some, buy sell liquid, not buy sell liquidity, not a valid one, but you can see that there is a fair value gap above. So probably, price can will be magnetized towards this fair value gap, and you can see that this has a buy sell liquidity. So yeah, here you go. Price mitigated the extreme 4-hour sub demand zone, which has got some inducement. It mitigated it. It swept liquidity, and it has chalk bullish. So this is the demand zone that is currently holding the price. So I can look for buys targeting the buy sell liquidity as well as the flip zone. So there are two targets that I can look for from this piece of price action. So from the H1 perspective, you can see that the H1 as, boss bullish, and this is the demand zone within the 4-hour demand that is currently holding the price. Then I can look for buys from this demand zone and target the buy sell liquidity above. So here is the lid. There is a clear lid for me to look for buys. So, and here you go. Cool. But since At this point of time, I was not aware about the time and price theory. So what happened is, this is the Asian high, and this is London Open. So price exactly took the Asian highs and then pushed down, took out. I mean, took buy sell liquidity, took sell sell liquidity. So what's next? Take out the buy sell liquidity again. Sorry, what I was saying is, price took out the Asian highs exactly during London Open. I mean, exactly at 7 a.m. That is during the Frankfurt Open. So these kind of liquidity sweep exactly at a particular time might indicate that this could be the high of the day. So probably that this fair value could be mitigated and then it could push down. So which means that I would be tagged in and tagged out. So that's what I actually wrote here. You can see that timestamps also. Okay, there is no time. Yeah, 7:54. Exactly what I mentioned is this could be the high of the day, and if the idea plays out, then the price would probably respect the bearish fair value gap and stop me out. And it actually happened. Actually, it actually respected the bearish fair value gap and it took out my stops. So the time and price theory worked here. So both there is market structure and there is time and price theory. So in this case, I was following the market structure for the past, how many months, n number of months. So this the time and price theory was relatively new for me. So I didn't listen to the analysis made by the time and price theory, and it ended up as a losing trade. So if I had that filter on top of this trade, then I would have wait for some more confirmations before getting involved. For example, I would have wait for um, no I would have not looked for an entry right here. Then I would have wait for an LC2A. Then I would have been looking for sells somewhere here. Even though that it would have ended up as a losing trade, but still that would have been much more. I mean, trades like those would, um, what to say, um, have much more strike rate. So again, after the price mitigated into the H1 demand zone, price again pushed up, and there was a valid confirmation entry, but I didn't take this trade because I already made a mistake by taking two trades on a single POI, and both the trades ended up as a losing trade. So I don't want that to repeat again, so I'm skipping this trade. And also London has made a high of the day, so this could hold and push the price down to take out the swing low. And yeah, it actually happened, and price pushed down to take out the swing low with force, with strong momentum. And it also invalidated the 4 hour demand zone. So that's, that's very strange. So that's July 28 for you. So coming to July 29. So again, since the daily demand has been flipped, so now I have two more by sell side liquidities which the price can take out before pushing up. And here you go, this is the 4 hour supply that is currently holding the price, and this is a clean sell side liquidity which the price can target once the price mitigates into the 4 hour supply. I can also look for longs targeting the price, expecting the price to mitigate the 4 hour supply. But with this low resistance liquidity right here and strong bearish momentum, I was not interested in looking for sells because with this huge losing streak, I just want to be more conservative and look for high probability setups. So here is a sell side liquidity sweep and price pushed up. So this demand is holding, and if the price pushes up, then this would be the valid demand for looking for buys. And let's see. Yeah, but the irony, yeah, but I can look for longs because price did not mitigate into the 4 hour supply. So there could be one more leg up, and the price could mitigate into the 4 hour supply before pushing down. So I can look for longs from the demand that is currently holding the price. Cool. But there is one more caveat. um, this is 6 a.m, 7 a.m, 8 a.m, 9, yeah, this is 9 a.m candle. So this could be the high of the day. So this could be high of the day, and this demand could be flipped, and then price can push up and take out the swing low. So applying time and price theory filter. So, and even though there was I was not aware of the time and price theory, but still, so, all I wanted is to look for buys targeting the supply above, following the market structure, supply and demand and market structure. So here you go. There was a valid LC2A. I mean, not valid LC2A. There was a break. So if the price continues pushing up, then I'll be looking for confirmation entry. But for now, with this break, I'll be looking for LC2A. If the price plays an LC2A, I'll be looking for buys. Otherwise, I'll be waiting for confirmation entry to look for buys. And all these will happen before the price mitigates the 4 hour supply. Once the price mitigates the 4 hour supply, then there is no more buys. And yeah, after the fake break, price pushed down and there was a clean LC2A. And uh, initially I placed my order right here, then I waited for the price to tag. So this is actually during 245 candle, and this is 245 to 3. So this is the end of the New York session, and immediately after the New York session ended, price swept this liquidity and pushed up. So, but even though that price pushed up, it would have been a break even trade, because once the price mitigates the 4 hour supply, I would have brought my trade to break even. So probably that price would hit my break even stops. So yeah, no worries. Cool. Now moving on to July 30. Quickly check the time in the clip champ. Okay, we got 15 minutes more. Cool. So July 30, the price again, we got two more sell liquidities to target, but we can also expect the fractal pullback to happen and price to mitigate the daily supply before pushing down. But currently I'm not interested in looking for buys as long as the demand structure is holding. So once I mean the supply is holding, so once I get the flip of the supply, then I can look for buys following the demand that is currently holding the price. Simple. So here you go. This is not actually pre-session analysis. This is actually for end of the day analysis, probably. Yeah. So yeah, I can see. Yeah, here you go. Asian session. The plan was, once the price takes out the Asian high, yeah, once the price takes out the Asian high, wait for the price to chalk bearish and then look for sells. So the plan was simple, but once the price takes out the Asian high of the day was formed, and price rallied down with momentum, and all the low resistance liquidity was taken out, and price mitigate, I mean, took out the swing low. So again, in this case, I could have placed in risk entry right here, placing a sell stop and stop loss above. It could have been an easy 2 point, I think 3 hour, I guess. Yeah, it would have been an easy 3 hour trade. So this is the learnings for the day. And yeah, one example case is with low resistance liquidity, price is rallying down, so I can be more aggressive in looking for sells. So this is a very big move and not capitalizing on it. I know that the price is going to come down, I know that there is low resistance liquidity, but just waiting for an entry model, I missed this beautiful trade. And I'm missing these kind of trades, and I'm looking for that small in and out trades, and ending up and I mean, getting those trades as losing trades. So uh, when I look at the holistic view of my trade analysis, so this is what I am. I mean, this is what I was doing for the past 3 to 4 months, taking trades that are very short, that are very low risk to reward, um, and getting manipulated by the market, and probably the price might move in my direction or might not move in my direction. That's the second case, but I'm missing out these kind of big moves because of waiting for an entry model. So yeah, you know I'm just going to refine it for the next 100 days, and I'll let you know, I know what are the refinements, what are the rules that I have incorporated. This is a very big move, it's a quick TP hit. So you don't have to sit for 2 or 3 hours waiting for the price to mitigate, take out your TP. It's very quick in and out trade. And by the way, the 2.5 hour is right here, so within 1 or 2 hour you'll be TP hit. That's it. Cool. Let's move on to July 31. So again, one sell sell liquidity is been taken out, so the next sell sell liquidity target is right here. So again, I know that the price is going to come down to take out the sell sell liquidity, but I'm not able to capitalize on this move. So you saw that the move yesterday, I mean, in the yesterday analysis, I was not able to capitalize on this move. So that's what I'm working on, capitalizing on my analysis. Here we go. This is the 4-hour supply that is currently holding the price, and if the price mitigates its 4-hour supply, this is a strong V-shaped reaction. I cannot definitely look for aggressive entry, so I must look for chalk bearish in H1. Then I can, with the structural alignment as a confluence, I can look for sells. And yeah, there is a chalk bearish, and price mitigated the supply exactly at 9 a.m. So this could be the high of the day, and I also have a chalk bearish with me, so it's I can look for sells, right? So here is a valid lead. If the price mitigates the lead, then I can look for sells. And yeah, price mitigated the lead, and I placed my stops just below. And there was, I had to wait for a long time before, you know end of the session price did not mitigate the TP hit, so I concluded this as a break even trade. But the next day price hit my TP and it went down. So that's for July 31 for you. So August 1. So again, this supply, I mean, this demand is still holding, so price is building up a low resistance liquidity right here. So price can rally down, take out the sell liquidity below this. Yeah, here is the weak internal low that that is the target now for today. And yeah, this is the supply that is currently holding the price. So this is a very good trade if I look for an what you say, risk entry. But risk entry is still under progress, so I'm not interested in looking for any risk entries. So I'll wait for the price to chalk bearish and then look for sells. And also I cannot look for, uh, I can look for direct LC2A models, but or I can also look for price to chalk bearish with valid supplies to time the entries. And yeah, but here you go, price mitigated the supply, chalk bearish, and this is the supply that is currently holding the price. So if it was any other day, I would have uh, directly entered, I mean, I would have looked for LC1, directly jumped into M15 and looked for LC1s. But since I am applying the time and I mean time and theory filter, then I realized that this high was formed during at 6:45. So London did not make high of the day. So either London can make, London lull will make, but most often not, Asian session will not make. So if an Asia makes the high of the day, then it means that it is a bank holiday in US or UK. So with that in mind, I was not interested in looking for sales from the supply. So even if I wanted to look for sales, I'll be looking for more conservative entries like MC entry. So yeah, price mitigated the uh, price mitigated the supply, and there was a valid lid, and also price came up with a strong bearish, a bullish reaction, and there is a strong imbalance right here. So most often than not, what happens is price will just mitigate this fair value gap and start to push up and take out the high. So this could means that I'll be tagged in and tagged out within 2 to 3 candles. So this time, yeah, I'll be looking for sales. I'll But at the same time, I need to respect the time and price theory, the signal given by the time and price theory, and not rush the trade. So what I did is I marked this fair value gap, and I waited for the price to invalidate this fair value gap. So once the price invalidates the fair value gap, then there is no stopping the price. Then I can look for sales directly targeting the H1 swing low. That was the idea, and here you go. I got saved from a loss, and yeah, there was a lid, and price respected the fair value gap. Immediately, it took out my stops. I mean, it would have took out my stops if I had placed an LC1, but now what happened is, um, price took the highs. So this could be the high of the day. Probably New York has made the high of the day, and now I can look for buys, and then look for sells, targeting all the low resistance liquidity right here, and as well as the Asian low right here. So you can ask me like, this could be the low of the day, right? But remember, low of the day is formed when a price sweeps some liquidity. So in this case, price swept this liquidity. So this could be the high of the day. So in this case, again, yeah, price swept this liquidity too, but this liquidity is much stronger than this liquidity. Why? Um, because it's a session high. It's just a quarter session low. So, but no, sometimes we cannot say that this is stronger than this. It's all depends on your intuition and your experience in the market. So in this case, I looked for sales, but price actually held up. This became the low of the day, and price just uh, invalidated the supply and pushed up to um, take out the H1 swing high, and now it's a clear boss bullish. And yeah, that's the end of the session. And yeah, thought this was the low of the day, and this became the low of the day. Cool. So yeah, this time and price theory is new for me. Yeah, I have used it, but no, I'm not sure. I've not made any mechanical steps, or I've not used it consciously. I just used it subconsciously because I used to trade ICT earlier. So uh, I just used it subconsciously, but now I'm bringing that as an additional filter along with supply and demand, and making it as a mechanical step. So now I need to segregate trades. So when to listen to price action, and when to listen to time and price, and when to listen to market structure. And if both are contradicting, both are giving opposite signal, what is the entry model that I must choose? So yeah, there is a lot of study to be analyzed. Over analyzing also leads to paralysis that I don't want. The thing here is I must keep my analysis as simple as possible, at the same time apply filters to eliminate all those losing trade, because I was seriously disappointed when I look back to my past 100 trades. Just I just have the strike rate of 31 percentage, combining both London and New York. So if I compare only the New York trades, then I have 33% strike rate. So the first thing that I thought was leave London session and trade only the New York session, because New York is much more safer than London, because we know what is the low of the day and high of the day, and we have already a directional bias set by the London. So New York is much safer to play. So I am thinking of, and the less I trade, more, I mean, in trading less is more. So I'm thinking of the applying that also, but let's see, it's still in under progress. So probably in the next, after 10 to 15 trades, once I deep analyze my data, then I can incorporate these changes. But the thing here is, I must self evaluate myself, keep updating myself. So I'm not interested in um, getting tangled in this cycle of getting five losses and getting one winner and becoming happy that I'm a trader. No, I don't want this one. I must get out of this cycle, and after five trades, one winner. Instead of that, taking that five trades, I can take two losses and one winner. So that increases my strike rate, and eventually I can be a better trader. So yeah, it's a long journey. So let's see what happened, what my data is suggesting me. So yeah, until then, cheers, guys. Bye.